Metro Vancouver is currently debating development charges, and this is one of the most important housing stories happening right now. But it's also one of the most misunderstood. So let's break it down simply. Development charges are the fees builders have to pay when they build new housing. These fees fund infrastructure, things like water, systems, sewer, and parks. The issue is how quickly these costs have increased. For a typical apartment, development charges were around $6,000 per unit. In 2024, by 2025, they increased to $13,000. And by 2027, they're projected to reach over $20,000 per unit. That's a significant increase in a very short period of time. At the same time, we're seeing a major shift in the market. Pre-sales, which developers rely on to secure financing, have dropped to just 87 units across Metro Vancouver, compared to a long-term average of roughly 3,900. That makes this one of the slowest periods in over 2 decades, and this is where everything connects. If developers can't sell enough units, they can't secure financing, and if they can't secure financing, projects don't move forward. So even if housing is approved, it doesn't mean it gets built. And when projects don't get built, future supply starts to disappear. This is why the current debate matters. Metro Vancouver is now considering whether to roll back these development charges, but that creates a different issue. Reducing fees could create a funding gap of roughly $389 million, which would normally go towards infrastructure. So the region is facing a trade-off. Higher fees may slow construction, and lower fees may reduce infrastructure funding. And both of those decisions have long-term impacts on housing supply and affordability. There's also a broader context here. Across Canada, we're seeing similar patterns. Pre-sales are down, construction costs are high, and many projects are being delayed or canceled. So this isn't just a local issue, it's part of a larger shift in how housing is being built. The key takeaway is the housing market isn't just about prices today. It's about what is and what isn't being built for the future. And right now, there are clear signs that future supply is under pressure. If you want to understand where the market is going, you have to look at the pipeline, not just current listings. I've broken it all down in detail in a full article on my blog, including the numbers and sources behind it. I'll link that below if you want to go deeper. I'm Debbie Evans with eXp Realty, serving the North Shore and Vancouver markets.